Before we get started, just a quick reminder to hit that subscribe button, and also don't forget to turn on notifications for stock analytics.
Yeah, that way you won't miss any of our deep dives.
That's right, you'll never miss our deep dives into some of these fascinating companies that we're covering.
Yeah, we try to find companies that are really, making waves, and today is no exception.
Yeah, today's a good one. We are diving deep into AppLovin Corporation.
Ticker symbol APP.
APP, that's right.
Mm-hmm.
And, you might not have heard of them. They're a little under the radar, but they're a pretty big deal in the mobile app world.
Yeah, they're huge. They've built a software platform that helps developers promote their apps and, most importantly, make money from them.
Okay, so they're helping other companies make money from their apps. That's interesting. But what makes AppLovin a company to watch? Like, what are they doing that's so special?
Well, that's only half of it. That's one side of the business. The other side is that they develop and publish their own mobile games.
Oh, wow.
And they're not just dabbling. They have a portfolio of over 200 games.
Over 200 games. That's incredible.
Yeah.
No wonder they brought in, what was it, like $3.28 billion in revenue in 2023.
That's exactly right. And if you want to break that down, their software platform generated $1.84 billion.
Wow.
In-app purchases from their games brought in $989 million, and then in-app ads, another $452 million.
So they're not putting all their eggs in one basket. That's a really smart strategy.
Exactly.
To diversify like that. But this mobile advertising market, it's so competitive.
It's brutal.
How do they even stand a chance against like Google and Meta and companies like that?
Well, that's where their secret weapon comes in. It's called AXON. And it's an AI engine that basically analyzes tons of data to optimize in-app ads in real time to make sure that they're hitting the right audience.
But they're not just like showing more ads, they're showing better ads, I guess you could say.
Right. It's all about being smart about it.
Yeah, very strategic.
Exactly.
Yeah.
So it's constantly tweaking and adjusting which ads are shown based on, user behavior, all sorts of factors.
Wow.
And it's a level of sophistication that a lot of companies, even the big ones, haven't really figured out yet.
And I mean, they're also like laser focused on the mobile gaming market, which is, let's face it, it's exploding right now.
Huge.
Mobile gaming is everywhere.
Yeah, and I think they have a really unique edge because they're not only developing their own games,
Right.
but they're also providing advertising solutions for other developers.
So they know both sides of the coin.
Exactly.
That's fascinating.
Yeah.
Okay, so we've talked about, their platform, their strategy,
Yeah.
this booming market.
Yeah.
What about the guy in charge who's leading this company?
So the CEO and co-founder is Adam Foroughi,
Oh, yeah.
and his story is really inspiring.
Didn't he face like a ton of rejection early on?
Oh, yeah, he pitched to venture capitalists left and right, and they all said no.
Wow, that's rough.
But he just kept going.
He must have really believed in his vision.
Absolutely, and look at them now.
Yeah, and he's got what, like a 98% approval rating on Glassdoor?
As of this recording, 98%.
That's amazing. That's so high.
It is. It's really remarkable. He must be doing something right to keep his employees that happy.
And I think I read that he owns like 12.5% of AppLovin.
Yeah, he's all in.
So he's putting his money where his mouth is. He's not just, trying to make a quick buck.
No, he believes in the company.
He believes in the long-term success of this company. So we've got a powerful platform, a smart strategy, a booming market, and, a really driven CEO at the helm.
It's a pretty good picture so far.
It sounds promising. But before we get too excited, we need to look at the numbers.
The financials.
Yeah, the financials, see if the numbers back all this up.
Of course.
So where should we start? What are some of the key things to look at?
Well, one of the most important things is their profit margin. And thankfully, theirs is a very healthy 73.89%.
Okay, so they're making a good profit on their, core operations. What else?
We want to look at free cash flow, which is basically how much cash they have left over after covering all their essential operating expenses. And AppLovin generated over $1 billion in free cash flow in 2023.
Wow. So that gives them a lot of flexibility to, reinvest in the business or, weather any storms that might come up.
Exactly. It's a good position to be in. But there's also something that could raise a red flag.
Okay, what's that?
Their debt-to-equity ratio,
Yeah.
which is a little high. It's at 374.1%.
Whoa, that sounds like a lot. What does that mean exactly?
It means that they're using a lot of debt to finance their operations.
Okay, so while their revenue and their cash flow look really strong, they're also carrying a substantial amount of debt.
Something to think about for sure.
Yeah, definitely something to consider.
Yeah.
Okay, but before we dive into that, I just want to remind our listeners about something exciting.
Oh, yes.
We have a stock analytics YouTube channel.
We do.
You can find a link in the episode description.
Make sure to check it out.
And if you enjoy these deep dives and you have ideas for other stocks you want us to cover, leave a comment.
We'd love to hear your suggestions.
Absolutely. Okay, so back to AppLovin. We were talking about their debt, that high debt number.
Yeah.
So is that something that investors should be worried about?
I mean, it's definitely something to keep an eye on.
Yeah.
Debt can be a useful tool for growth, especially in, a fast-paced industry like mobile gaming. But it does come with risks.
Yeah, for sure. So how do we, weigh those risks against the potential? I mean, they seem to be doing a lot of things right, but that debt is a big question mark.
Yeah, I think that's where we need to look at AppLovin's intrinsic value.
Intrinsic value.
Yeah, what is this company actually worth
Okay.
based on its earnings potential?
Right. So even though the market seems to like them, their actual value could be different.
Right, exactly. And one of the ways we can try to figure that out is with a discounted cash flow analysis.
A DCF.
Yeah, you've probably heard of it.
I have.
It basically involves projecting the company's future cash flows
Okay.
and then discounting them back to their present value.
So calculating the value of a promise.
Exactly. Like how much are those earnings in the future
Right.
worth to us today?
Yeah, I get it.
And when we run a DCF analysis on AppLovin, it gets interesting.
How so?
Well, even with strong growth projections, the analysis is suggesting that AppLovin might actually be overvalued at its current price.
Wait, so you're saying even though they're growing fast and they're making money, their stock might be too expensive?
It's possible. And that's why it's so important to understand this concept of intrinsic value and not just rely on
A market hype.
Exactly.
Yeah, the market can get a little crazy sometimes.
Oh, yeah.
So how do we protect ourselves from that?
That's where the concept of margin of safety comes in.
Margin of safety, okay.
Yeah, you can think of it like a buffer,
Okay.
a discount built into the price you're willing to pay.
So even if the company looks good on paper, we shouldn't just jump in at any price.
Exactly.
Got to be smart about it.
Right.
Have that margin of safety.
Yeah, and I think with AppLovin, given those concerns about overvaluation, you would probably want a pretty big margin of safety.
Makes sense. Okay, so we've got the potential overvaluation, but we also have, all the positives that we talked about earlier. Is there anything else that we need to be looking at here?
Another thing to keep an eye on is insider activity.
Okay.
And with AppLovin, there has been a trend of insider selling in recent months.
Does that concern you?
I mean, it's something to think about.
Okay.
Insider selling isn't always a red flag.
Right.
Sometimes executives need to sell shares for personal reasons, maybe to diversify their portfolio.
Yeah.
But it is worth noting when you see a pattern like this.
It's like, if you saw the head chef at your favorite restaurant suddenly stop eating there,
Yeah.
you might be a little bit curious.
Exactly.
What's going on?
Something to keep in mind.
Yeah.
And, some of it could be related to their, share-based compensation program.
Okay.
But it's still something to consider in our analysis.
So we've got this mix of, potential and risk.
Okay.
Right. Strong financials on one hand, but high debt and insider selling on the other. How do we make sense of all this? How do we know if AppLovin is a good investment?
Well, a helpful framework might be to look at it through the lens of Warren Buffett's investment principles.
Oh, the Oracle of Omaha.
Yeah.
So how does AppLovin measure up to, Buffett's standards?
Well, he looks for companies that are, understandable, have strong financials and capable management. And in a lot of ways, AppLovin checks those boxes.
Yeah, their business model seems pretty straightforward. Their revenue and cash flow look great. And Adam Forey, the CEO, seems very competent.
Right. But we've talked about that high debt, right?
Yeah.
That might not be something that Buffett would be crazy about.
Right. He likes companies that are a little more conservative with their debt.
Exactly.
What about that potential overvaluation? Does that align with Buffett's approach?
Not really.
Okay.
He's all about finding value, buying stocks when they're trading at a discount to their intrinsic worth. And as we talked about, AppLovin might not be there right now.
So they kind of embody some of his principles, but they also deviate in some key areas.
Yeah, I think that's a good way to put it. And then you also have to consider how competitive that mobile advertising market is.
Right.
Buffett tends to prefer companies that have a durable competitive advantage.
Like a moat.
Exactly, a moat around the business. And, AppLovin is definitely strong, but they are going up against Google and Meta.
Yeah, they're giants.
So even though they're growing fast, there's always the risk that somebody bigger could come along and disrupt things.
So what's the verdict? Should our listeners buy AppLovin or avoid it?
Well, like with any investment, there's no easy answer.
Yeah.
We've highlighted both the potential and the risks.
Yeah.
And it really comes down to each individual investor.
Right. And we're not giving financial advice here.
Of course not.
We're just providing information and analysis.
Yeah, helping people make informed decisions.
Exactly. So I think the key takeaway here is that AppLovin is a really interesting company with a lot of potential. They're a leader in a fast-growing market. They have a talented management team.
Yeah.
And they're generating strong financial results.
But there are risks.
There are risks.
You've got the potential overvaluation, the high debt levels,
Right.
and that fierce competition.
It's a compelling story, but not a guaranteed win.
Exactly. And for anyone who wants to learn more, we've included links to all the source material for this deep dive in the episode description.
So be sure to check that out.
Yes.
And don't forget, if you're enjoying this deep dive, subscribe to Stock Analytics and turn on notifications so you don't miss any future episodes.
We've got some great companies lined up.
We do. And if you have suggestions for stocks that you'd like us to cover, head over to our YouTube channel.
Yeah.
Leave a comment.
Let us know.
Okay, so we've covered a lot of ground today. What's the one thing you want our listeners to walk away with about AppLovin?
I think the biggest takeaway is that even when a company looks great from the outside, there's always more to the story.
So as we wrap up this exploration of AppLovin Corporation, is there like one final thought you want to leave our listeners with?
You know, I think the biggest takeaway here is the importance of informed decision-making. It doesn't matter if you decide to invest in AppLovin or not. The important thing is that you understand the company. You know the strengths, the weaknesses, where they fit in the market.
It's all about doing your own research, right?
Exactly. Yeah.
Being critical of the information that you're seeing.
Absolutely.
And making sure that any choices you make are aligning with your goals.
And your risk tolerance.
Exactly.
Your own personal situation.
Yeah, very well said. Well, on that note, we want to thank you for joining us on this deep dive into AppLovin Corporation.
We hope you enjoyed it.
We hope you learned something, and we'll see you next time.
Until then, happy investing.
See you later.